So today we have one of the biggest earnings reports in the history of the stock market, and that was due to the biggest company in the world announcing their earnings, Nvda. Today, Nvda announced their earnings. Earnings, for those individuals that don't know what it is a quarterly report. Quarterly being every 3 months, a company that is publicly traded on the stock market. Any company listed on the stock market is publicly traded. For those that don't know, there's a private sector like companies like SpaceX that aren't listed in the public market, so therefore they're not considered stocks. But whenever a company is publicly traded, they're expected by their investors to give a report of their earnings per share and their revenue every 3 months. And usually companies will either beat earnings per share and not revenue, or they'll beat revenue and not earnings per share. But when they do, we call it a double beat earnings. And Nvda has done that now for 3 times in a row. They beat earnings per share and they beat revenue now 3 consecutive times in a row. And why was the market so scared of this happening today? Because if Nvda wasn't able to beat their expected earnings per share and revenue, it reinforced the whole narrative behind the AI bubble. The market is fearful right now. The market is at all-time fear because they believe that these big tech companies and many investors have actually overvalued the true value and benefit that AI is bringing to our economy and has been overly inflated in price. And this is artificially increasing the current stock market to levels that honestly have never happened and shouldn't be happening due to the current state of the US economy. We also have the highest unemployment rate since April, and we're beginning to see delinquencies across credit cards, auto loans, and home mortgages and foreclosures rising as the current economic data that we've been receiving has been showing slowing signs. So this raises a lot of awareness. If the market is overinflated because of AI, the true state of the economy should be playing a much bigger and more economic factor than what the market is valued at, artificially increasing the current value of the market and having companies trade at these all-time highs when truly maybe they're not worth this much. So we've seen companies like Oracle, we've seen companies like CoreWeave, we've seen companies like Meta take these big hits in their share price over the last couple weeks simply because this narrative of the AI bubble was beginning to get traction and investors began to be much more fearful in this sector. But today, Nvda's earnings backed up that this AI bubble is not over yet, and we still might have hope for a much bigger run. And we saw today Oracle, CoreWeave, Meta begin to make these aggressive comebacks in their share price, but will they continue to run to their previously highs? Or do you think that December's interest rate decision is going to send our market down to April lows? But that summarizes today's Nvda's earnings. I hope all of us made some money. On my YouTube channel, I went ahead and shared with you guys the trade that we used and took that made us 160%. Reviewed what my thought process was, what I looked at that gave me the confidence to get into the trade and secure this profit for not only me, but all the members of SoCal Trading Group. I hope you guys enjoyed today's video, and to continue killing it in the markets and take your first step into investing, SoCal Trading Group is here to help you. Jerry Trades, over and out.